Alright, good day traders. This is Trusted Emmanuel, Trustwealth FX. On this episode, I'm going to be your friend and your tutor. On this episode, I'm going to be teaching you guys about market structure. And I need you to know that market structure is actually the market structure covers the 60% of your technical analysis. So if you don't know what the structure is saying, there's no way you can be able to trade. So we're doing a quick one, just market structure. We all know that when it comes to market structure in a bullish market, we want to see price giving us a higher high and a higher low, a higher high and a higher low, a higher high and a higher low. And in a bearish market scenario, the same thing. We want to see a lower high, a lower high and a lower low, a lower high and a lower low, a lower high and a lower low. So on this episode, we're not going to be doing much, just the framework of market structure. So on a bullish market scenario, as you can see, in a bullish market scenario, we want to see the previous high taken out. We want to see this low takes out this previous high. What I mean is that this previous high, we want to see it taken out. This high remains this low remains a strong low until this high is taken out. When this high is taken out, we have a new higher high. So this is just basically what happens in the market. It's just basically how the structure moves. So now immediately this higher low takes out this higher high, we'll say, okay, we have a break of market structure. This is a break of market structure. Immediately that high takes out that guy, we have a break of market structure. Let me name that a BOS, a break of market structure. So in your trading, you actually want to work with market structure. You don't just want to go into the chart and just, okay, because you are seeing a support and resistance, you are seeing some sort of demand and what they call it now, supply and demand, and you just want to enter into the trade. It doesn't work that way. If you are not trading in alignment with market structure, you're going to keep on hitting stop loss and all of that. You're going to keep on hitting stop loss and all of that. So there's something called Fibonacci ratio, premium and discount. So immediately price breaks out from a structure like this. Let's say, for example, we have something like this, and this is our earlier printed higher high, and this is higher low. We want to look for price, we want to look for an optimum trade entry around this zone to go for this high. So immediately this happens, you should put it in your mind that price we want to return back into discount level. You should put it in your mind that price we want to return back into discount level. Or let's bring this guy down to make it more easier. Let's bring this guy down to make it more easier to understand. Okay, all right. So now this is what we are seeing. Now, for example, now in your chart, you will see market comes down and break out from this place. Immediately price breaks out this high, it creates immediately another higher high. It creates another higher high immediately. Now your job as a trader is to wait for pullback phase. That's what we call pullback phase in trading. And this entire range here, this entire range to the downside is called a pullback. So price is going to do this as long as it wants to do it, until price finds some sort of institutional reference points at the downside. So probably an order block. If price get an order block around this zone, price will sell. If price get a fair value gap, price will sell. And where do you want to target? You want to be targeting the next high. And immediately price breaks this high, price will immediately form another break of market structure. Price will immediately form another break of market structure around that high. So This is how it is in a bullish market. In a bullish market, we have higher high and we have higher low, higher high and higher low. So this is what we continue, it will continue to be like this till till price intends to um give us a market structure shift. A market structure shift. So um until price decides to give us a market structure shift. So this is going to continue like this. So at a point in price action, you will see that price will come to this place instead of price coming to this side and moving up to continue its bullish movement. You will see price failing to do that. Rather, price will come for this low. Immediately you see this, you will say this is a change in market character. Immediately you see something like this, we call this a market structure shift. Immediately you see this, because this low wasn't supposed to be taken out, this higher low wasn't supposed to be taken out, but because of price came to meet price actually came to meet some kind of a PO high. Let's say for example, price came to meet a fair value gap around this zone. Price came to meet a fair value gap around this zone and reacted from that fair value gap. You will see this pullback, and if this pullback takes out this previous higher low, then we call that a market structure, a change in market character. So it's just like a change in market character is just like price is actually doing something. Let's say for example, price is running and all of a sudden price decides to stop running and start jogging. So this is what it is. So the character of the market previously is higher high and higher low, higher high and higher low, and all of a sudden price came in contact with an higher time frame, what they call it now, an higher time frame POI. So let's call this a POI. Let's say for example, price came to meet a fair value gap. For example, price came to meet a fair value gap. This is it, a fair value gap. Let's say price came for a fair value gap as an higher time frame POI. Now immediately that happens, you see that okay, price might, instead of price coming to respect this structure and continue going up, price will just shift and break market structure here at this low. Immediately price takes out this low, we call that a market structure shift. So price has now changed its character from higher high, higher low, and price has broken this place. So you can't just say okay, you want to keep on buying, and haven't seen that price has changed market structure, you want to decide to keep on buying. That's how you keep on getting stopped out and all of that. So immediately things like this happens, we already know that okay, this high now becomes our protected high, meaning this high becomes a strong high, and we want to see lower high start printing out in the market. Lower high we start printing out in the market. So this is just basically what market structure is. This is just basically what market structure is, and it's still the same thing when it comes to sales scenario. It's still the same thing when it comes to sales scenario. I don't just want this video to be that long, but it's just still the same thing. So price will keep on giving us a lower high, lower low, lower high, lower low, lower high, lower low, until price comes to a valid POI, and you see that price will push up instead of giving us a lower high and pushing downward. Price we decide to break that high. Immediately this happens, we say okay, the bias is now currently in the market, we'll stop looking for sales, then we'll start looking for buys. So this is just basically what happens. All right, guys, I believe you find this video helpful. If you're just seeing me for the first time, do well to subscribe to this channel. I remain your friend and your tutor, Trusted Emmanuel. See you on my next video on market structure. All right, take care.